Be Wealthy and Smart, episode 1357.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how tech dominated in May. Now, obviously, tech's been dominating for a while, but my point is just that some really startling statistics stand out to me about what happened in May. First of all, the NASDAQ was up 5.5% in the month, while the Dow was up 0.9% for the month, and the S&P 500 was up about 3.5% for the month. Now, that's good news because all of the major benchmarks were higher in the past 6 months out of 7. But what's really interesting is a lot of May's strength can be attributed to NVIDIA, which released blockbuster earnings last week and announced a 10-for-1 stock split. This month, NVIDIA shares are going to end up around 26% higher. And there's a lot of talk about how it has become a large percentage of the S&P 500. When we look at the top tech companies in the S&P 500, NVIDIA is number 3 behind Microsoft and Apple, and the percentage of the S&P total portfolio that NVIDIA is responsible for now is 6.2%. Apple is responsible for 6.31% of the S&P, and Microsoft carries 7% of the S&P. Amazon is in 4th place at 3.72%, Meta in 5th place at 2.33%, and Alphabet Class A, Google, 2.3%, and Alphabet Class C, GOOG, 1.94%. Those 7 classifications of stock add up to almost 30% of the S&P's performance. That's enormous. We've been following over the last year how important AI is to adding additional market cap onto some of these tech companies, and that continues to be the case. With the rest of the S&P 500, it's going to be up to them to implement AI and make sure that those profits go to the bottom line, and they'll start seeing some of the same good results. But right now, it's the big tech companies, the companies that can really invest heavily in AI and convey that to analysts, that are making every portfolio want to own those particular companies because their growth and profits are going to outpace just about everybody else. At least that's what people believe. And we'll have to see if they can execute. But that's the path and the narrative that we're on right now. The economic data that was released today came in mostly in line with forecasts, with core personal consumption expenditures price index increasing 0.2% in April, which was what economists expected to see. Business activity in the Chicago region hit its lowest level since November of 2022 in April, according to today's Institute for Supply Management report. The Chicago barometer slid to 37.9 on the month, down 3.5 points from March, and below the estimate of 41.1. That means that there were declines in new orders, production, and employment, and it hit its lowest level since February of 2023. But inflation was still a little bit strong, with the prices paid index hitting its highest since August of 2023. But it looks like business is slowing, inflation is being sticky. And remember, all the Fed information is on such a lag that they're looking at past data, and they're looking in the rearview mirror, which isn't really forecasting what's going on right now. I've seen lots of videos about how shopping malls are nearly empty right now. And this kind of anecdotal evidence is what we pay attention to. Things may be getting a lot slower than people expect, or that are showing up in the current numbers, which again are on a lagged basis. Oxford Economist Deputy Chief U.S. Economist Michael Pierce noted the cooling in month-over-month increases represented better news on inflation than we saw in the first quarter. The Fed has generally been saying they're waiting for greater confidence in inflation's decline before they want to reduce interest rates. But right now, there's a 50-50 chance that the Fed will cut rates in September. And New York Fed President John Williams said he believes inflation will start declining again in the second half of 2024. He said, "I see some of the recent inflation readings as representing mostly a reversal of the unusually low readings of the second half of last year, rather than a break in the overall downward direction of inflation." Nationwide Chief Economist Kathy Bostjancic wrote, "Fed officials will need more than 1 month of better inflation readings to bolster their confidence enough to start to cut rates later this year. We forecast that further improvement in inflation is in the cards over the coming months and continue to see September as the time the Fed commences rate cuts." So we'll continue to monitor and see how things are going. But what remains apparent is that a lot of the performance is in technology and I believe is about to be in crypto. We have the altcoins really looking like they're poised to take off as they gain more dominance and Bitcoin loses dominance. With the Bitcoin halving this year, sometimes it takes a while after the halving for Bitcoin to gear up again in performance. And in the meantime, it looks like the altcoins or everything other than Bitcoin, they are poised for a very strong bull market. And that's why we think it makes sense to have at least 5% of your portfolio invested in digital assets. Some of these compounding rates are the highest we've seen anywhere. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.